I'm live.
All right, why not? All right.
She was just weeping, and she's like, "Why? Why did you do this to us?" You know, she's like, "I'm
Yeah.
just fucking tired."
So we were just talking about how, like, okay, so my mom, when I was 14 years old, she technically retired. The reason why is because my mom was working at a job that paid okay, but it wasn't like a lot of money. And in terms of taxes in New York City, it just didn't make sense. And her boss, who was a female, was just a dick. And it was just causing a lot of stress and tension in the house. So that's when my dad said, you know what, it's okay. Why don't you stay at home for a little bit? And it was probably one of the best decisions because we were able to have like this experience where in the morning time, we would have like breakfast together as a family. We would go to my wife wrote something. I'm a baddie. Get out of here, man. What's wrong with you?
What'd she say?
I'm trying to explain my story here, okay? This is my life story. Get out.
It's called history for a reason.
You see, you want to know something? The corporate ladder has convinced her that she needs to take on student loans. She needs to get a job. She needs to work freaking 12 hours a day. And now she's like miserable every day. She's got to drive an hour.
The thing is,
to
they've already
listen
already got men with that. They got men to like take on a loan, give up the best years of your life for the hope that you'll have as 401k for like 10 years, and then die. And now they got women roped into it too. Again, basically they pull the rug on all of us.
Yeah, and it's just sad because like when I grew up, it was my mom would be so stress free because it's just cooking some breakfast in the morning, getting to see her kids in the afternoon time. We would come home from school. She would sit with us. We'd do our homework.
Mhm.
She would like the experience of having a mom at home and in your teen years was awesome. It would have been nicer when we were younger if we had that.
He's like, it'd be nice at 38 right now, but I'll take it at
yeah. And
my
think of it now. I think of it now because like we're eventually gonna have kids and stuff, and I'm like, I see people literally going to work to pay for a nanny, which doesn't even make any sense. Like, between taxes and look, I can't afford daycare. That's the part that gets me, man. I wish that we were as a society okay with enough expenses that we didn't even need to have a nanny where we could.
So you're saying women shouldn't go to work?
No, I'm not saying women shouldn't go work. I'm just saying I wish we could go back to
right for the job.
I wish.
So what you're saying is are you a misogynist and a bigot?
No.
Or just
one or
the other?
I'm just saying I wish we could go back to a place in history where a household could be run on one income. That's the part that sucks because now there's no way if you want to have a decent life, you need a 2-person working household. If you try to make it as a single person, unless like you're at some high level profession and you're able to actually afford to have, daycare and all this other stuff for your kids, it's a chore, man. Some people have like 2 jobs. It's what is that? Cacciatore?
Someone's asking what I'm eating.
It's garlic bread and ravioli, right?
Just pasta with ground beef. My wife's ground beef is awesome.
Yeah.
You're
right, dude. Like I said,
$40,000 like in the 50s and 60s. One guy working 40 hours a week could have a house, 2 kids, car, pay for those kids to go to school, have vacations. I mean,
but I also think from a relationship perspective, no one wants to be with someone who isn't having an income now, right? Like culturally, like you wouldn't want to be with a wife that doesn't have some money coming in, I would imagine.
No, I disagree with that.
You okay with that?
Dude,
it's not necessarily true. It's something that's nice to have, but it's not a prerequisite the way it obviously is. I think the other way. Like I don't think any woman's gonna date a guy, no matter how attractive the guy is. Yeah, that doesn't have some sort of a future.
Yeah, my thing is one of the goals for most people investing, especially if you're a guy and your wife is working like another job, and it's like and you have kids, and literally you're working to pay for someone else to raise your kids. That's the part that I hate the most to see. You know what I mean? Like,
and the only counter to that is like someone in my situation where I don't have any family close. It is nice to have my kid have influence of another grown adult.
Yeah.
Because I don't have that. And I think part of the reason why what you're saying is true is because you don't have like a family close to you. I think I'm not a grandparent, obviously, but I think one of the greatest rewards will be being able to help my kids raise their kids.
Yeah.
When I'm like retired and just hang out with them all day.
My mom's looking forward to that, bro. She's so excited.
Do you have a relationship with your grandparents?
Well, my mom's side is in India. My dad's side, they passed away this past year.
Yeah.
Didn't really have a relationship with my dad's side, but my mom's side, yes, but they're in India, so it's kind of hard. But my dad's side did take care of us when we were a little bit younger, when my mom was going to school and stuff like that.
It's kind of nice.
Yeah.
Kind of nice.
One of the comments that someone said, I'd rather live in 2023 than 1963. See, it's not about the time and like that part. It's about the ability to have the optionality where you don't need to have a 2-family household. I could care less if it was, 2023 or 1963. I'm not saying we need to go back and women need to stay in the house and, stay in the kitchen. All I'm saying is I wish we could go back to a society where our expenses weren't so high that we needed to have a 2-person household, that we can support a good lifestyle with just one income,
Yeah.
It's really not possible now.
Definitely not with inflation. That is for sure.
That's the part of inflation. And I was watching some video. I was saying like inflation is basically another tax
Yes.
on
100%.
you. It essentially acts like another tax.
100%.
So I mean, what do you say? Well, basically all of our money is just being eroded.
Who is David Gahan?
You're just gonna have to look it up, buddy.
Is this another Nirvana dude or something?
He's the drummer for Nirvana.
Really, he is?
No.
English singer Depeche Mode?
That's right,
What the hell is
baby.
that?
We're going through a musical journey on this podcast.
Bro, what music do you guys listen to, bro? All this random ass shit.
Well, I listen to good music.
Why can't you just listen to Michael Jackson?
Oh, well, why don't we
Beatles?
put on a little bit of Carlos's music and then we'll take a poll if it's good music.
Well, no. We definitely can't do it on this channel.
Oh man, do you know who
Fuck.
Frank
Italian-
Sinatra is?
Italian-
Yeah,
you know who
Fly
Frank
Me to the
Sinatra
Moon,
is?
I know that.
Yeah.
Besides
Okay, good.
Tool, you cannot put on Tool.
Oh yeah, you're gonna tell me what I can and cannot put on. Why don't we put on one of your?
No, we can't put on
whiny
anything.
white
This is the
boys
new
music?
channel. We already have one strike. If we get second strike, we're fucked completely.
No.
Yeah.
Are we on
What
the
about
channel?
you, V?
Oh shit, we are on the channel.
Yeah.
What about you, V? What do you think? What do you think about like right now, society, the way it is set up is that we all need to have a 2-income household to basically make life worth living. Like, whereas someone back in the day, they had the ability to raise a family with a single income household.
Yeah, I mean, that sounds like something we should aspire to, but I don't know if we can go backwards that way. That a lot of things fundamentally have to change in America for that to happen, right?
Yeah, I think, well, here's the thing that I think I would love to see. I know a lot of people are saying, well, AI is going to come over, and take everyone's jobs. Maybe one day we'll get to a point where AI will be so good that most of the jobs that are out there will just be high paying single person jobs, and the other person can stay at home and take care of the kids. The reason why I say that is because right now, if you look at population collapse all over the world, it's crazy. Any country that has been industrializing, the birth rate has gone to shit. And
Yeah.
right now, most places, the birth rate is below replacement level. So if you go to like Korea, I think it's like 0.7, and the healthy is 2.1. So if you think about it, you have two sets of grandparents. They have they have kids. Those kids get together. So if they only have one kid each, then that's one. And if they only have one kid, that's it. Like, the next generation is pretty much going to be cut in half. So if you look at China, they have demographic collapse. Japan has
China's
demographic
at
collapse.
2.26 births per 1,000 people.
Damn.
What?
It's not good.
Damn.
Look it up. Something like
Well,
2.
they did inflict that one child policy
was
shit
just-
on their own, but they got rid of that a while ago.
Yeah, but it
but
wasn't.
see, yeah.
It was the long term effects of that and the social effects
Correct.
of that
Correct.
lasted way longer. They
Well,
did it way
what's
too
the
long.
U.S. at? It's also pretty low.
The U.S. is just at replacement level.
1.7. It's
we're like-
1.7. No. We're actually, if it was not for immigration into the U.S., we would actually be lower. Immigration is what actually keeps our population somewhat growing. Whereas if you see countries that are a lot more strict with immigration, their populations are declining at a much, like Japan. Japan is probably the worst case of that, where most of their population now is actually at the top, where I think there's probably like 25% of every person there is actually like a retiree.
It's 35,
and-
33%. It's 1/3.
Higher, yeah.
33%. That's even higher. It's crazy.
Yeah, but though, I mean, I don't think that trying to maintain the population is a reason to increase immigration.
No, I mean, immigration is one of those things that's there has to be a healthy balance of you can't just have like a whole bunch of people come into one country and then statistically change. I mean, not statistic, but like basically change what's
Demographically
made this
change.
demographically change the country into something that's like completely a hodgepodge of, you have to have a level of assimilation and time for things to adjust.
See, this is interesting.
But it's just, yeah.
Mike says his portfolio is going to determine if he has kids, and that's totally fair, right? Like if he can't afford to bring kids into this world, you don't want to do that. So,
I mean, look, there's two sides to that story because it's like my wife and I have no couples that like are not doing as well as we are, and they have like 4 kids. And what the thing is, once you get to a certain level, you actually do get access to a lot of help. And if you have family close to you, it offsets a lot of the additional costs that like we have, like I have a daycare and then we also have a nanny to help out. And those costs would be eliminated. Like if my mom was a town over, you know what I mean? Or a good portion of them would be. But I also feel like I've never been truly ready for whatever the next stage in my life was at the point that it
jump
came.
in.
So you just do it because okay, like look, once you have the kid, that's it. The kid's not going anywhere. So you're gonna figure it out. I think if you wait too long, you risk
That's true. You don't want to be an old fogey playing baseball with your kid when you're like 70. That's not going to work out.
That's a concern for me,
but
that's a concern for me right now.
Yeah, we're both old fogies, but at least we have some kids in the pocket here. But what I wasn't prepared for, and maybe some people were younger, yes, you just do it. You should just get at least the first one over with. If you're going to have a kid, waiting longer is probably going to make it worse for you because it's always going to be pushed to the future.
You always
have
have
the line is going to get bigger and bigger outside.
You're always going to have something else to do. That's the thing, or always more money to make, or always another job. That's always going to happen. But one thing I wasn't ready for was like, okay, so all the expenses that come, because you don't think about all the expenses. Like you're like, okay, obviously I have to pay for education and food, but then you start thinking, oh, I got to pay for this daycare thing. That's 4 or 5 days a week. This mofo eats more than he's supposed to.
This kid wants
to go to Cheesecake Factory every week now.
Every time we go out, it's like, I want this toy. This is the greatest toy. This one toy will make me the happiest thing on earth. The very next day, forgotten about.
And I used to have dinner, like dinner would be like $100 if you're just taking your wife out or your girlfriend. And all of a sudden you're feeding 4 people now. So it's not $100 anymore. It's like $200 now because they charge you for freaking a piece of toast and some cheese. They're going to charge you $20
on
at
that
restaurants.
Plus
the tips, of course. But I'm saying like it gets really expensive. So if you it's good not to think about that. Get the first one over with. Obviously, not be totally broke while doing it, but you got to get the process started at some point. You can't wait for this perfect moment, like Carlos is saying. That's never going to come. The perfect moment will never happen.
But I also think anybody with an investment mindset can understand the idea of like putting something in the bank now and watching it grow. When you're old, when you're 70, 80 years old, what are you going to want around you? You're not going to be looking at S&P. I don't think so. I'm not going to be looking at the S&P or chasing stocks. I want to enjoy time with the people. I want to enjoy my time. And I joke with my kid all the time that every diaper I change now is a diaper that she's going to change when I'm 80. I'm going to stop wiping my own ass after I turn 70. And I'm just going to be like,
here's the rag. Here's the rag. You got to finish this up.
And I think now I have 4K video of me, the proof. I have the receipts.
Me and the wife don't have any kids. We have been trying, and we had a miscarriage, so it was like one of those rougher times. But we're working on it, So Ahmed, of course, is still single, unmarried, and he hasn't gotten laid in quite some time. So if any women on the chat want to help him out with that,
oh God, you can't be propositioning a chat. Oh, God.
I will never sleep with a fan.
He has a righty and a lefty. Yes.
Pamela
Harris.
What about you guys? If you guys want to share how many kids you have, that's fine.
I have 2. I put in the chat.
I have 2 as well.
Yeah.
Well, I'm sorry, I have 1 and 1 on the way.
I don't know if you want to transition away from kids, but this is actually a big bull thesis of mine based on Tom Lee's bull thesis. So that's where I stole it from, because his whole thing is demographics, that the United States is going to just propel because the millennials are growing up. Obviously, they're going to be having kids. They're going to need more real estate. They're going to need more stocks. So if the population I think we're fine till the 2030s, by the way, because the millennials are still here. They're coming into their prime earning years. So they're going to buy a ton of real estate. They're going to buy a ton of equities. And also the baby boomers are dying, and everybody thinks they're selling all their stocks. But no, when I die, most of my wealth is going to my kids. Okay. I'm not Bill Gates and just giving it all away. Most of it is going to the kids, so they don't have to struggle as much as I did. So I think that's what's going to happen here, a big transition. But having said that, 20, 30, 40 years from now, I could see this being a real issue where if we don't have population growth, it's going to be a problem for the stock market and real estate.
Yeah.
Bro,
One of the things that I always get shit from like some of my relatives, like you go to like these family events, right? And they're like, so Chris, what's going on? Why aren't you guys having any kids yet? I'm like, we've been trying, but it hasn't been working. Maybe you want to come home and give me some pointers. Just like
You got any videos on like how to get it done?
it's like maybe you could tell me what I'm doing wrong. It's just one of those things.
Chris, it's not the back hole, it's the front hole.
Holy shit, really? Oh my God. I had no idea.
I'm making sure you're aware.
okay, given we're talking about population, let's transition to this, and then we'll go to big tech earnings. Elon, obviously a big proponent of like have more kids, stop saying we shouldn't have kids. He's changing Twitter to X. Apparently, we are totally rebranding this website. What are your raw thoughts on what he's doing? Does it make sense? How do you guys feel?
I was actually live on that Spaces. So at like 11 o'clock last night, Greg, that funny guy, Greg, posts a Twitter space that says, no one talks until we summon Elon. And I look and there's like 1.5 thousand people in there. And I'm like, all right, I joined the chat. I join it. No one's saying anything. And there's like 10 people that are like mods, like Whole Mars is there. A bunch of people that like, pretty high follower content. Everyone's in there. And so people are just responding to whatever Elon's tweeting because he was on a tweet storm last night. And we're there for like an hour. And then Elon posted something. And then people just kept saying, Elon, come in, come in. Then he posted like 2 exclamation points. And he was like, what? And so then he just like comes on. And he's like, hey guys, I was playing Diablo, like taking a shit, like what's going on?
Hilarious,
and then
bro.
they just start asking him a bunch of questions. And that's when he said, he's like, yeah, we're going to cut down the Twitter logo tomorrow with a blowtorch and we're going to rebrand it. And an hour or so before he had posted something like, I'm thinking about changing it to X. If somebody has a great logo tonight, we'll actually make that the logo. So then everyone starts responding with a bunch of their logo designs. Sawyer Merritt posted one, and like right before Elon came into the chat, he retweeted it. He retweeted Sawyer Merritt's, and then he came on and he was like, "Yeah, we're gonna do this thing."
And then Linda, the CEO, said, she said, the fuck did she say? She said some. Where is it? Oh, here it is. She said, X is the future state of unlimited interactivity centered in audio, video, messaging, payments, banking, creating a global marketplace for ideas, goods, services, opportunities powered by AI. X will connect us all in ways we're just beginning to imagine. I believe what she's saying, but it literally sounds like she's trying to raise $5 million from a venture capitalist, right? And she's just like, yep, it's going to be everything. And the VC's like AI, video, audio, podcast, payments.
She hit all the buzzwords. Yeah.
Take my money. I think it's going to work, man. Now, granted, I don't know if I'm going to enjoy calling Twitter X, because I still call Meta Facebook, but I like the rebrand because Twitter has a lot of baggage towards it, and I don't think it's a bad thing to change it.
I agree.
I don't know.
I like
So we're no longer tweeting. We're Xing.
Yeah, I don't know what he's gonna call it.
Well, in another thread, somebody was like, now all we got to do is get rid of the term followers. And there was a whole thing like a week or so ago where people were offering suggestions about what to call them. There were actually some really funny ones. My recommendation was to call them mobsters so that you could talk about your actual Twitter mob. You know what I mean?
Oh, that's legit.
I just thought it was like play because people talk about the Twitter mob. Let's give it a good connotation. Anyway, none of them got any traction, but then to that response, somebody was like, yeah, we got to get rid of the term followers. He wrote viewers. And like, I think people like even like Farzad and those guys were like, nah, leave it followers, because then how do you what's the verb? Like the word tweet has become a verb for it. Like
it's very hard to develop a verb like that,
really
bro.
Fucking hard. Like
a YouTuber, that's such a perfect. People put that on their LinkedIn. I'm a YouTuber.
Exactly. So I don't know. I think I'm still gonna call it tweeting. I mean,
I think we have to. I don't know what else we would call it.
Yeah, imagine Google was like, just change it because, Microsoft's trying to call it binging it. So nobody wants to do that.
No one wants to do that.
So, I think you got to keep the verb because that developed over time.
But even people that use Bing, like I had Bing as my main search engine for a while. I was like, let me give it a shot. I would still say, let me Google this on Bing.
From a term of art.
Because the word Google doesn't mean search on Google.
You know,
It's a word for search. Like
Google doesn't have a trademark on the word Google. They only have trademarks on Google Home, Google Nest, Google Play. Google itself is a term of art, and so they haven't been able to trademark it. So like you could actually use it wherever you want.
well, you know, I mean, you know what the word Google actually means, right?
No, I don't.
Are you kidding me?
What does it mean?
Stop
No, what does it
fucking
mean?
around, dude.
It means search. That's what I Google it. I search.
Okay, I think you're trolling right now.
I
but
don't know what
on
Google
the
means. I
event
have
that you're
zero
not.
clue. I swear. I
Wow,
don't know
okay,
what
Google is an actual thing. Google is the number one followed by 100 zeros.
Oh, I think you're. Yeah, I've heard this before. Yeah. You're
Okay,
right.
so it's a real thing. It's like that's why you can't trademark it because it's an actual word.
Ah,
Man, I thought you were trolling me just now.
I didn't know that. No, I didn't know. I think
I didn't
heard
know
it a
that
while
either.
ago.
I didn't know that either.
Really?
Yeah.
There's
Yeah.
there's a lot of videos where people try to visualize what Google is. I'll find one that's amazing. This guy made a box. Yeah, one with 100 zeros. This guy made a box of gears to show you what Google would be. And basically it was a gear, like it was 100 gears that were geared at a gear ratio, I think 100 to 1. So every time the first gear turned 100 times, the second gear would turn once. And every time the second gear turned 100 times, the third gear would turn once. And then you can spin that machine as much as you want, and it still will take like 1 billion years for that last gear to turn once, you know. I'll see if I can find it just so you can visualize how massive that number is.
All right, let's get into big tech. We got a big week ahead of us. We got Google, Microsoft, Meta, Roku, Enphase.
Did you watch Oppenheimer, by the way, with a carp
No,
cameo?
I didn't get a chance to watch it. No, I'm gonna watch it soon on IMAX.
Also, Enovix Tuesday.
Novix on Tuesday. So let's start with you, Vitaly. What are your thoughts? Pick one of those stocks and kind of give us a little bit of a
Which ones did you say?
Google, Micro.
Let's start with Enovix.
Okay,
Enovix.
Go ahead. What do you expect from it?
And check
I'm
the
expecting
chat, by the way.
16,000 batteries because it's supposed to be double the number of batteries from the previous time. But honestly, fundamentally, I don't think anything's changed. So we'll see what happens if they actually say we've produced more, but they're still scaling. It's going to take some time. The stock has run up quite a lot.
Have you sold off a decent amount of your position?
I did. In fact, I did. And if people are in our Discord and the Patreon, they can see exactly what I've sold off.
Yeah. Okay.
But I always keep a big position. It's not like I've sold off everything. I always keep my core position. I just let basically the shares have paid now for themselves. So now I can keep the shares that I have and they can ride, they can go up. And I'm not going to get FOMO and try to buy back in. But if it tanks and it drops, then I can buy back in.
Okay. Chris, what are you expecting from Google, Microsoft, Meta? Any three of those, you can take it however you want.
Well, I think most of them are going to do well because they had a lot of room to cut costs, right? Especially headcount. But the thing that worries me about that is that trick you can only pull once or twice before it start affecting your core business, right?
Yeah.
So the thing is, like, you can't, if you are not growing and the only thing that you're showing is bottom line profitability, that'll be like an indicator of where we're probably headed in the next maybe year or two, because a lot of recession signs are starting to flash red for me, but they're not like necessarily out there in the market like to the umpteenth degree. The other thing is I'm starting to see some inflation coming back into the market, which, you know, a lot of times when is FOMC? It's next week, right? FOMC is
Tuesday, I think. Tuesday or Wednesday.
Yeah. So a lot of what's going to happen on Tuesday, because you're coinciding big tech earnings with FOMC at the same time. I mean, it's pretty much guaranteed that we're going to see a quarter point rise. Now, what I'm going to be looking for especially is how the FOMC actually communicates that, where they could be super dovish or they could be kind of hawkish. They could be very neutral. And I think that'll set the tone for the next, the next leg in the market. So I wish it wasn't the case. I wish big tech earnings were on its own, because I think that's going to just create a lot of volatility in the market, where you'll see maybe in the opening hours right after the FOMC decision comes out, you might see it climb, and then what's his name, Jerome Powell comes out and he talks about this and he says the wrong buzzword and the shit crashes again. It's like those are the kinds of things that are not going to be good. And at the same time, you've got big tech, which tends to be like the thing that's holding this market up. if even one of them starts to have like some doubts behind like performance, then
Which
then
one
we
out of
could
the
see-
three do you think could show doubts? Microsoft, Meta, or Google? I think Meta's going to
I-
kill it.
Okay, so from profitability standpoint, I think Meta is definitely going to kill it. The growth is something to consider, but at the same time, they might actually pull a good growth number because of all the Instagram verified checks and everything else. So that will start. I think that'll start reflecting in this earnings also. So that'll probably help boost Meta up. The one I guess to worry about is Google, because the expenses of running AI and everything else like Bard, those are not cheap to run. You have to invest all this capital into TPUs and everything. And from what I'm seeing, advertisers have been pulling back on putting stuff on on the media. And at the same time, you've got Meta and Amazon now taking some of the market share from e-commerce advertising. So I would think that Google is probably the one to watch for the most negative. The others should be relatively fine. Microsoft is going to kill it, of course. They've got ChatGPT, everyone's using it. Amazon has had nothing but positive sales behind their numbers, but yeah, I'm more worried about Google.
There was a really great, I'm looking for it now. There was a really great visualizer of Google's Q2 only earnings for the last 20 years, and it's insane. I think somewhere around 2017 it just went parabolic. And I think to Chris's point, you might see increased earnings, but it matters how they're making those earnings, right? If they're making earnings by firing people, or how much of it is just like increased prices for services due to the pandemic. You know what I mean? So there's other underlying metrics in terms of how they got to that number. And if the market just looks at revenue, then it's not necessarily the indicator of the health of the business. Do you know what I'm saying? And that's with all companies too. That's not necessarily with all companies, because if they all got sort of increased pricing premiums, but we're also in a higher inflation environment, it takes a while to adjust for that. Where like the new norm, where those new levels become normal, if I'm making any sense.
So
Yeah, I forgot Apple as well. Apple's not
Apple,
this week.
by the way,
They're
next week, but yeah,
they're next week. Okay.
yeah.
So I just want to mention that Google's already pretty much down. I think still 40%. I mean, I haven't looked recently, but
From the highs.
yeah. So I think yes, even if there is a bad earnings for Google, like what's the downside? We're going back to $100. I think we hit the low, which was $85 or so. I think that's over. You had your chance. So I mean, there's really little downside with Google and Amazon. It's just these are silly things people who worry about these earnings for these companies, because like they can have a bad quarter. Means nothing. They're already so far down. They have nowhere to go but up in the long term. Like so.
What's the market cap now of Google?
Google's market cap is
something.
$1.53 trillion.
I think it was $85, under $1 trillion, possibly.
It's crazy that Apple's like twice that.
That's what I'm saying. Like,
That's insane.
Lowest it got to was 86 on January 5th.
There you go.
That's insane.
I mean,
Yeah, I'm just looking to buy any weakness on Alphabet, Amazon,
Yeah.
even Meta. Honestly,
Can you hit the compare thing, like the compare button, and put like the big tech companies there? Because this way we can see how each one has fared over the last 6 months. Because I think that's a telling sign. And then you can just go to. There should be a way you can do more.
Yeah, I got it.
Yeah.
This is how Wall Street convinced you that these companies suck. By the way, bad earnings, they tank the stock. Idiots sell
And
out.
then
Of
they buy it all.
Literally idiots sell out of Amazon, and then they chase it back when it's doubled. So if it actually goes down, I hope the people watching this are smart enough to DCA into some of these companies.
Get rid of Nvidia, man. Nvidia is like an outlier. Like that's not.
Yeah. Just
Yeah.
leave.
There you go.
Can't find it.
Meta, Amazon, Apple, Microsoft, Google.
And just go to like the year to date.
Year to date. Okay,
There
so
it
leading
is.
the pack is Meta.
Got it,
Congrats to Vitalian.
That was.
First on that.
That's right. That's right.
Then we got, what's the next best up? The orange one is Apple, up 53%. Then we have Amazon up 51%. So Apple and Amazon the same. Microsoft 43%. So Google did the worst out of everybody. Google did
Can
the
you go to the 1 year chart, or even the 5 year? Let me see the
Brian C 726.
So the 1 year, look at that. What is that
Yeah.
purple one? Amazon. It's basically not even moved.
7%. Yeah.
Yeah, look at the blue one is Microsoft. Is that no the
11.
blue one?
No, blue is Google.
Yeah, so ridiculous. These
Yeah.
two companies are amazing too.
What about 5 years? Who's
Keep
done
behind
better over 5 years? 5 years is Apple. 300%, Microsoft 219, Apple or Google 91, Meta 68. So Meta actually, because it fell so badly, and then Amazon 43. So Amazon's done the worst out of all of them 5 years.
Again, Brian C at 726 brings up a good point that by next, I think Tuesday, they're going to be done with the rebalancing of the index. So there was a sell-off. There was plus the rebalancing. Yeah. So there is going to be a natural sell-off.
Well, while they're rebalancing out of it, I'm rebalancing into it.
Exactly.
Here's my question: is it better to be in the mid caps if big tech is going to lead the way down, or are the mid caps going to get affected by big tech coming down? Do you think there's some rotation into like SoFi, for example?
They're making money. Yeah.
SoFi is not a mid cap.
That's where the money's going to go.
I mean, a small cap. Sorry,
it's a small cap. Yeah. But the mid caps are going to,
because it'll be interesting.
They're going to make some of that money, and they're also going to give you the outsized returns because of the smaller market cap.
Right. Like if Google shits the bed, but SoFi doesn't, it'll be really interesting for investors who are in SoFi, not in Google, right? Which historically should be a bad bet for most people.
Well, technically, right now would be a good time to actually look at small and mid caps, because all of them have been recovering as well in terms of like their financials, but they've been completely ignored. Everyone keeps looking at Google, Microsoft, Amazon, and they ignore these other companies that are actually taking a lot of strategic steps in order to improve the business, right? And that's where you actually might see a 5-bagger or 10-bagger in the next 5-10 years. Whereas I think these are very mature companies where they're still growing, they're going to do very well, but they're not going to have like exceptional returns. Like if you look at Enphase is still growing double digits. Like, would you rather be in like a slow mover like Amazon or Google compared to Enphase? I mean, you should still always have Google and Amazon. I'm not saying don't have.
So you're bringing up two things though. Yeah. There's a part of the portfolio that should be safe. There's a part of the portfolio that should be like the dividends. There's a part that should be the growth.
Yes,
if everything is one or the other, you're not going to do great. It's just going to be very.
No, but
hard.
I'm talking about as a hedge fund manager. They take all their capital, they move it in and out.
No, I'm talking about retail investors. Like retail, we like to talk about, I'd get a 10-bagger in SoFi, but I'm not going to get that in Amazon. That's not the point. The point is Amazon will compound and protect your money. That's it. That's the point.
That is
not
true.
every single dollar needs to 10x, because if you know exactly that SoFi is going to 10x, great. Congratulations. You're the winner here. But if you don't know, and you're still unsure that this company might not do that, Amazon is a great place to park money, compound at 10, 20%, leave it alone for 10, 20 years. You'll do absolutely fine. And that's a portion of your money. That's it. And then the rest could be.
Are you sure about that, Vitaly? Because, that's the same thing that someone told me, like, you should just buy GE and hold it forever in like 2006, because they're like, that's the largest company in the world. They make everything that goes around. And then 10 years later, GE is close to bankruptcy, right? Because you have that natural.
You have a valid point, but that was a value trap. So Amazon is not a value trap.
But it's also what was the world like?
We know it's still growing. That's the thing. Amazon is still growing. Google is still growing. Microsoft. They have so many verticals, especially with AI not coming into fruition. GE never had that. Like we never saw the opportunity there to go into some other business besides just collecting shitty old businesses. Totally different, I think.
And again, what was the market conditions and information available at the time that GE was the biggest company in the world? Like when my aunt told me to start investing in 2000, and I told her I wanted to buy Apple, like 99, 2000, it seemed like an odd outlier to her. She was like, no, go into like Home Depot. Her big stocks were like Home Depot and some of the airlines. She made a good bit of money, but she started investing, probably like 50s, 60s, 70s, 80s when she was making money. And she had to do it through a broker. You know what I mean? And so it was just different. Now you have so much more. You have more information available to you now on Robinhood than like people had,
and if you have gold, you got the free reports from Morningstar with Robinhood, which is also really good.
So I think Rango said Amazon easy 10x. I don't know about 10x, but that's not the point. I like your GE comparison because Amazon is still growing and scaling into multiple verticals. Like we know this. Mm-hmm. It's not a secret. Right?
What are those verticals, by the way?
Well, advertising, AI, cloud compute. There's like so many.
But cloud
electric vehicles, robotics.
Back a little bit. Cloud compute has been there for a long time. It's not growing as aggressively.
No, it is still growing. A lot of
how much is it growing? It's not growing as much as it was a couple of years ago. They've taken a lot of market.
We get AWS to slow down right now, but every business on earth, every dentist, every little tiny factory is not on the internet like we all think. It's just not there yet.
Yeah, they don't
They're
need
going to need,
AWS, Vitaly. They
and
need
first of all,
Squarespace.
and not only that, everybody thinks we're going to need less compute. We're going to need more compute.
I agree with you. I'm just saying AWS, I don't know, is this massive growth compounder you're talking about. It's been around since 06. It's number one against GCP and Azure.
Once again,
Yeah,
go ahead.
But one of the things is, if you look at how much compute, how much storage is still on-prem, it's like 95%. Okay. So what it is like cloud is going to grow because the entire market is going to grow, but there's so much market share left to take from the incumbents already that's where the bull case for cloud computing really is. So
okay, when you say 95%, what do you mean by that? Because every big enterprise I know, they're not using physical data centers. Are you talking about, like, what type of companies are you talking about using physical data centers?
Everybody. Like, okay, here's an example. My hospital system. We have our own data center. My hospital organization, we have our own data center in one of our sister hospitals in a facility, right? So all of our medical records, all of our applications, all of our services, everything runs on-prem at that data center. And then we do have some cloud backups where we can actually, change out and go to them if it's necessary, because the cost of actually doing everything in the cloud is really, really expensive. Like if we tried to do 100% cloud, the cost would be astronomical compared to maintaining our own infrastructure. So we still have our own infrastructure. Now, the thing is, over time, the cloud compute is actually getting cheaper. So eventually we could probably move to a more hybrid model and then eventually move 100% to the cloud if that's even possible. So I would say that these are the kinds of things and there's a lot of businesses that still run on a lot of applications that run on legacy infrastructure where you're dealing with things on-prem. Those are the kinds of things that as we migrate away from, more stuff is going to be put into cloud services. So as of right now, I'm just saying that there is still a huge market for cloud compute. And that market is not only growing organically itself, but then you also have some of that margin that's in the physical on-site stuff being taken away and being put into the cloud instead.
Well, I'll give you a simple example. Like right now we keep talking about AI and whatever's happening. Imagine you're a small business, whatever, 100 people, you have it all, small infrastructure in-house. You don't want to go anywhere. But as soon as Amazon comes out with something that can take all your data and give you something useful, maybe like Palantir, even whoever, then all of a sudden you do have a reason to move to the cloud. So Amazon has this massive cloud bull case still happening because they're so affordable to run your back end, but not everybody can do that yet. And at some point, these features that we call AI features or whatever, LLMs or whatever is used, that doesn't matter. You're going to want a piece of that as part of your infrastructure at some point. Because right now, think about it. Nobody really needs it except maybe Microsoft, Amazon, the big guys maybe need it. But there's a lot of small players that don't use it. And in 5 years, it might become normal to start using some of this stuff. So,
but I think to get the multiple you're talking about, it's not about a bunch of small players. It's other big players or consuming market share, or just continuing to grow market share against some of your other competitors.
Apple is massive, not because big companies are using it, because you and I use it.
Yeah, but they're not in that. They're not in that business.
What I'm saying, that Amazon is in that business. First of all, Amazon is in the low margin scaling business. That is exactly the business they're in. So
no, what I mean is like Apple's like B2B relationships are different than what Amazon's AWS service is providing to companies. Like I don't know anybody that's using Apple as like their enterprise server.
Oh no,
for mail. Like they're just not using
for their photos.
Yeah, for their photos they're using that, and for their private ones. Good comment by Rango at 735. He's saying if only AWS is worth 1 trillion, are you telling me that ads and e-commerce is only worth 300 billion? It's true.
Yeah, and that's the other part.
So where do we get this 10x then? Like, does AWS become?
I got a theory here. The real barrier to adoption of this is hard drive capacity and speed, like the speed of the communication. Okay. And I'm just saying this as an anecdotal experience in my business. Part of the reason why they still they force us to go to an office and like edit and work on shows is because it's a lot of data to try to move and put on a hard drive and bring it over. And then when new data is created, it's very hard to move this data back and forth. I'm working with a client right now that's in New York City. Okay. They shot a comedy special and they want to get it to me. The fastest way to get that number of terabytes to me is actually putting a hard drive in the mail and sending it to me, because uploading it over the internet and having me download it is going to take 5 days. Right. But what happens when the speed is faster than getting on a plane? Now you've got a bunch of things that now go through the physical mail that will now go through digital mail. So, for example, like to Vitaly's point, if you have a company with petabytes of data that they have in-house, but now you can get those petabytes of data offloaded off-site, have them manage it for you, and then you have instant access to the data. Plus, on their side, on the Amazon side, they would give you, like, say, a Palantir type software that would give you analytics on that. There's no company that would there's no company that would prefer to invest in that hardware infrastructure and the IT to manage it versus putting it on somebody else's. So even the companies today that have these massive server systems, as soon as the data transfer is fast enough and the capacity can handle it, it's a no fucking brainer. And then that just becomes a line item that every company has to have.
By the way, I'm very familiar with Amazon Web Services. We use it on my startup, and we've stored thousands and thousands and thousands of gigabytes and megabytes or whatever of audio for like pennies on the dollar. I mean, it's incredibly cheap.
Yeah, but now you're using it as a dump pipe to just a store. Eventually, you're going to have to use much better services than that.
No, we do. We have a couple other servers because there's actually people listening and pressing and all that stuff. And like,
but it's like think
the
about
audio that takes up server
in 1990. Like,
but it's just cheap. Is my point. It's very cheap.
Not even 1990. Let's say like 2000. It's funny to me. 1990 is actually 2005 from where my brain works. But like in 2005, 4, 3, a company like Dropbox could not offer the services because the internet just wasn't there. And nobody, like, even though they could say, oh yeah, store all your video on here. Okay, that's great. But if it takes me 2 hours to download a 30-second video, it's not practical. Now, their minimum storage is like 2 terabytes, right? And even Apple, they give you 2 terabytes. Why? Because they can have the capacity. Hard drive storage is super cheap, and the speed that you can access that data is fast. So I think that's the real limiting factor to this.
Yeah, let me give you an actual example in our world. So Carlos uses it more, but frame.io is a place where you put your video files and you can annotate them and you can change things and you can discuss with producers in different parts of the world.
That now was imagine by Adobe, by the way.
But imagine 5 years ago, 10 years ago, imagine someone thinking, I'm going to put my video files, my private HD files that I put in my movies on someone else's server. Like, that would be a big no, by the way. There's no way in hell they would do that. They'd be afraid of leaks and all this stuff. But now it happens on a daily basis. Yeah. It's crazy.
Well, and the other thing, too, to consider is, at least on this side of it, on my side of it, because look, in the business that I'm in, the amount of data that's generated is massive. It's not like the petabytes of small little files. It's a lot of, it's fewer massive files. This was another reason why they make you go in the office, is because the work from home thing wouldn't work right now. What we're doing now, work from home, is kind of a cheat code, because all it's really doing is remoting me into a computer that is physically on site. The real goal here is to not even have that computer exist. It's basically to have all of the video in the cloud. And I'm editing on the same machine that I'm using to log in. I'm actually editing on that machine, but instead of having a hard drive connected to the machine with the media on it, I'm able to stream the video live from the internet. That's where the real goal is, because then you upload the footage into one place and everyone's accessing it remotely, versus what's happening now is on their side, they basically have a bunch of rooms with monitors and chairs and computers, and someone remotes into it. And I'm basically controlling the computer that's there locally because it has a fast connection. So we're still not even at what the end game is yet. And once that end game happens, I mean, forget about it. That's going to have implications even on like the real estate market. People will literally move anywhere in the world.
Because what we'll do during the week, Matt and Rango, during the week, we'll do a full Amazon episode. So we have a full hour to dedicate to it. So both of you, I'll text you guys on Twitter to set it up. And
why don't we do it after earnings, though?
Yeah, after earnings. We'll do it.
I just want to highlight a comment by Gail Thomas. It's really far up, so Amit, you may not find it, but the normal trend is companies go from on-prem to the cloud, then realize cloud has restrictions and go back to being on-prem, and the future is actually hybrid. I see that happening every time I'm looking at some of these things. That's the exact thing that happens. Everyone thinks the cloud is the greatest thing on the planet. They go into the cloud. They realize, 1, it's expensive. 2, there's all this other cost that you need to maintain it and specialized stuff that you have to do to it. And then everyone's like, oh, maybe we'll go back to being on-prem. And then, and then they miss the benefits of cloud. And then they're just like, let's go with hybrid infrastructure and then go from there. And believe it or not, I'm surprised no one here mentioned Oracle. Like, of all the companies, the companies.
I think we have one share, right?
Huh?
No, that was Cisco.
No, that's Cisco. That's Cisco.
Oracle's a $300 billion company. They're not a small deal.
Pull up Oracle. Pull up Oracle, and you'll see what I mean in terms of like growth. Oracle is definitely not a value trap. Like I spoke to quite a few people,
They're
and
up 40%
everyone's like,
this year.
I know friends
Huh?
that like know.
Look at the
them
whole chart,
directly.
though. Look at the
yeah,
whole chart.
They're up 40% this year. 5 years, they're up 100. No, this is not a value
No,
trap.
they're doing
they're
not bad. How about
beating.
Max?
They
How about
beat
Max?
all of big tech.
Oh,
What's
yeah.
wrong about Max?
No, it looks good. I did not
You
know. I
know.
did not look at this.
Yeah,
Yeah,
What's the, what's the
167,000%.
what's the market cap?
319 billion. This is what I think Palantir's actual. I don't think it's Salesforce. I think it's Oracle, to be honest.
That's
the
pretty
next
good.
year.
yeah,
They've done well.
yeah. See, this is what I mean. Like a lot of times we focus on just our main core guys like Amazon, Google, Apple, and it's great that we do, but then you miss these giant movers like Oracle. I didn't realize this until I started to speak to some of my engineers, and they're like, "Yeah, man, Oracle," and they have all these products like something called Golden Bridge. Like they'll just name them off their top of their heads, and a lot of people forget how big and how powerful Oracle really is even with on-prem and now with cloud. So I would say in terms of cloud offerings, another one to look at also is, believe it or not, IBM. I know a lot of people like discount IBM and say, oh, IBM's like this company from the 1980s.
They're considered somewhat legacy, like your GE, your GE comparison. They're closer to GE than one of the newer companies. Oracle's a lot closer to GE than one of the newer companies.
Yeah.
And of the boy Steve, Cisco. It's like those are the old school big tech mega giants of like the 90s and early 2000s that it sort of disappeared from the conversation, but they're still making money.
I don't think anyone should invest in IBM.
No, I agree with you.
Look at this, 0.22% as a shareholder for 5 years.
Go ahead, look at their max.
What's the dividend?
Look at their max.
Year to date down, dividend is 4.7, which is not bad, but with all the other opportunities in tech, if you're going to bet on this guy.
Yeah, but you got to do the math because
even Max is only 383. Oracle's 167,000.
So I think this is where they got a new CEO. I think about 2 years ago. He's an Indian guy.
Oh, this is a horrible return. 300% over 4.
Hold on, before you go into looking at just the history, look at some of the newer stuff that they've done. Number one, they did an acquisition of Red Hat, which has been one of their bigger growers. They actually took one of their divisions and spun it out completely. Their services division, they spun it out completely. There's actually some alpha to be made here in the IBM side, but it's something that's going to rely on the CEO executing very, very well, compared to the some of the other points. So just like I said, this is a company I wouldn't necessarily invest in right now, but I would definitely keep my eye on them.
No, the problem is also like if any good engineers are in IBM, they would probably leave. So I don't think they're going to have the best engineers because that's not the sexiest place to work at. So if you look at the top 10 right now, engineering places that you want to work, I bet you IBM is not in the top 10. Take a look. Let's find out.
It's Palantir. That's number one.
Well, I know definitely.
No, but I agree. But even if you got stock options 5 years ago at IBM, your stock has literally gone up 0.22%.
Right.
For 5 years. Imagine giving 5 years of your life and soul to a company, and you don't get any value from it.
That is a reason to get you to leave.
Unfortunately, people like Rango who work at these companies, all they care about is money. Okay, Rango, he's going to find the next 10x, and we've talked about it basically. So IBM is not that. So they would not get the great engineers. That's not going to happen. They're just going to have the old fogies, and that's fine. They're going to keep chugging along, and they're going to be okay. But at least Oracle, you showed me with the stock price, they might actually get the good engineers because their stock is going up.
If they do an AI play, Chris might be right. If they pull something out of a hat and they really
but who's doing that for them?
I don't know. I mean, they're gonna have to figure that out.
I think a lot of people are forgetting how much IBM, even right now, one of the largest patent holders on the planet is IBM. They, I think, only last year lost the title because they do so much money internal research. They have such a huge patent library. Like I said, I think a lot of this stuff was just bad moves by the leadership and not recognizing future trends and going in that direction. It's not that people don't want to work for IBM. People want to get a job. People need to have a job. The question is, what is the leadership doing in order to attract new talent? What are they doing to keep talent that's really good and to move some of the less productive parts of the company out of it so that they're a lot more mission focused, So someone even said, I like I told you, I am really, really curious to see how they do with this Red Hat monetization. Red Hat was a great.
But they've owned it for like 10 years already. This is not
no,
a date.
No.
Yeah, it was 5 years ago, 7 years ago. This is a while ago. I remember this.
Hold on.
This is not a new acquisition, buddy. This happened a long time ago.
2019. July 9th, 2019.
Are you sure it's only 2019?
I'm looking at it right now, the press
Okay.
release, 2019.
All right.
And Jim Whitehurst, who was the CEO of
4
Red
years.
Hat, stayed with them for like 3 or 4 years. I think he just left a couple of years ago, you know. So they bought it for $34 billion. And this was in 2019.
Wait, hold on. They bought the company that makes what you're wearing on your head right now?
That was his best joke of the month, I think.
Red Hat. By the way, I just want to give a quick shout out. This is the new channel, and this is the first time we have hit 400 people on the new channel.
All right.
So I want to give a big. When we transition over here full time, one of the things we're worried about is will the numbers translate, and for 418 of you guys to show up to the new channel, which is like 40% of the subscriber base, which is a really good ratio. Thank you for being here.
And it's also close to what we get on the.
We get like 560
what
on
we
mine.
get on your
This is
channel.
really good because we want to transition here full time.
Just actually, while we have the attention of people in the chat, do you guys get the same notifications for like the shows that we do on this channel as the ones that we do on Amit's channel? Just let us know.
Yeah, hopefully
If we're getting that same reach, if it's the same, less, or more.
Okay, can we transition to
less? I mean, he has 20,000, 21,000 subs. He's getting pushed to way more people right now. That's just obvious.
Yeah, but it's only right. But we're getting the same number of people, and it's basically the same.
That means these 420 people actually give
these
a fuck
people.
about the pod.
I see
really
the same
care about the
names in
pod.
the comments all the time. It's the same people.
It's Trader.
No, but
it's
that's
Trader
good. That
Juan,
means they actually
Johnny.
came.
I'm
from
okay
one
with
channel
that.
to
I'm
another
okay
channel.
with that. Keep
Yeah, I'm
following
just
us.
pointing
Thank
out
you.
that it's not a new
I'm
group of
fine
400
with
people. It's the same.
Look,
400
Everclear
people.
Boy said didn't even realize this was a different channel. So it's like
There
we're
you
coming
go.
through. It's coming through the same pipeline. I
We
actually
can't make any
remember
money
at
on this
7
channel because your boys messed with Apple, so they stopped
Oh,
all their income. on the
Apple,
channel.
the
They fucked
greedy.
Apple messed with us, dude. Hold on.
That's right.
It's so funny, bro. That was their biggest event.
What
What do you say?
They fucked us. We could have been making bank right now.
We could have been making it, bro. That's their biggest event of the year, and they don't want people to
They don't
share.
want
It
people.
made 0 sense, bro. 0 sense. Okay, Thursday. Does Enphase go up or does it go down? Do I get to buy the dip on Enphase, or do I have to see you gloat at
Spear
240?
cube down. Chris down.
I think it's gonna go down.
I was gonna use my Beyonce and Lizzo analogy, but my wife told me I have to stop being so Lizzo phobic. So I'm
Yeah,
gonna,
no, your wife is right.
I don't hate
I
you,
just think
Adam.
I think you've
love
reached
you,
the
Adam.
Lizzo quota for the
I
week.
see you. I see you in the
Yeah.
chat, Adam.
I think they're gonna do okay, believe it or not. I think, and the reason why I think they're gonna do okay is because there's been
You
a
think
lot
they're
of
gonna do okay?
pessimism.
I think
Yeah,
they're
I think they're gonna do
crashing,
okay.
bro. I think they're gonna fucking.
I think
shit
we're
the
gonna see.
bed.
I think TJ's gonna get
I think that's gonna be the
he's
greatest
gonna
day
get
for
his
all of us.
150 because
No, I think
And-
they're gonna be okay. Always expect the least expected. If everyone is expecting shit to crash, you best believe you're expecting Lizzo to show up, and you might actually get a Nicki Minaj. That's all I'm saying.
Wow.
Last time I was
I wouldn't-
expecting
I wouldn't be
Beyonce,
mad.
and
I
I had
wouldn't
an
be mad if
average of
Nicki showed up.
180.
Listen, as long as I'm getting laid that night, I don't care who's coming.
it's like when you turn out the lights, they're all Beyonce anyway.
All right, so you yeah.
Wait, why are you laughing? Oh my God.
That's a fucking amazing quote. That's why. It's
That's
like we
true.
turn off the lights, they're all Beyonce anyway.
Back
so
when
Chris-
I was a kid, we used to say, "You just put a flag on our head, and you do it for the country."
Oh, I
Have you guys
heard
ever-
the
have
other
you guys
one.
ever-
You
have
put
you
a
guys
paper
ever
bag
been-
over the head and you do it for the country.
or-
I heard
You guys
that.
ever been
That's
with a
different breed.
Lizzo in
Huh?
the context of a little chunkier woman?
Not as
I
big as
refuse-
Lizzo.
I refuse to answer that question. I
Right.
refuse to answer that question.
I have, and it was a total catfish. But by the time she showed up at the hotel, I was like, "Fuck it."
At
We're-
the
we're-
hotel, you just met
Yep.
right up at the
You took
hotel.
chicks
Yep.
to hotels.
This
You
was in
smashed my
Kentucky. This
hotel?
was in Western Kentucky.
Oh,
So it
okay.
was-
Goddamn degenerate, bro. Taking them to hotels and
Seriously.
shit.
Were
It's
you the
Tinder.
bear? Were
Yeah,
you the
but
bear?
totally looked different than what she did on.
How
Tinder,
much did
bro.
you pay her to leave?
Yeah, but
No, did
if
you-
if you're only getting if you only see face
He
pics,
didn't. He
I'm sorry,
stayed.
you only
He finished
if
it.
you're only seeing face pics on the profile, you know something's up, dude.
Yeah, when she came, I was like, "Oh fuck, this is not what I expected." But she was. It was 3 a.m. I was like, "All right." whatever."
Like at 3 a.m., I must be lonely.
Yo, no one believes,
That's one
bro.
of-
No
that's one
one
of
believes
Vitali's
any
favorite
of my
songs.
stories. You guys think I'm
I like
making?
that
How
song.
can I make up Kentucky?
Closing time.
How do I make this up, bro? This is not.
No, the problem, Dex, is like if he was gonna make up a story, he'd be the hero in that story. That's not a story.
Yeah,
of
like I'm
look
telling
how
you, it
cool
was
I
a
am.
bad-
I scored me some, a Lizzo from Kentucky.
Yeah, it scored me. It was a white Lizzo from Kentucky, like from
Alright.
University
a
of Kentucky.
Wizzo.
Anyway,
Man, did you at least get some Nashville hot chicken?
we actually went to that. What's that place? Jubilees. I had Jubilees for the first time down there.
Mm.
It was
Okay.
really good chicken for the first time. I had it.
Was that her screen name?
Yeah.
No,
Did she have a
I
whole
forgot
bucket
her
of
name,
chicken?
bro.
Did
I
she
don't
eat a whole
remember.
bucket of chicken
Nah, I
in
don't.
front of you?
I don't know. Okay, so we gotta talk about AMC as well. We should talk about that. But so Enphase, you think it's going to shit? Enphase, Vitaly, you think it's going to shit?
Well, so Carlos thinks it's going down. Chris thinks it's probably going up. That's what he's saying.
I think it's going to be
I'll-
going up, but it's going to be like a very like muted response, maybe like
I'll
1
give
or 2% up.
I'll give a reason why I think, because we're still not in an environment that favors them in terms of loans to be able to push those to be able to get further installs. And I think unless they have a massive beat, then I don't think that they're going to see. I don't think they're going to be rewarded for that. Plus, Enphase isn't one of those companies that can ride the like AI wave. So maybe I'm in the minority here, but
So,
I think Enphase is going to shit the bed.
Oh, I just want to
I
point
would
out
like to see it
Q2
down.
doesn't
I mean,
mean
unless they beat it.
anything. Guys,
if they
Q2 doesn't
beat-
mean anything. Okay, you're
Say
talking
what?
about massive beat. No, Q2 doesn't mean anything. They can come in line or even less, but as soon as they say Q3 we're going up 20%, it's shelf to the moon. If they say Q3 is down and we're expecting less, we're going down.
What do you think they're
Q2
going to
has
do?
nothing
Then?
to do with anything
What do
anymore.
you think they're going to say for Q3?
Q2 is already priced in. That's already done. We're waiting.
What do you
for
think
Q3
they're going to say
numbers.
for Q3?
Okay, so usually, like I said, Q3, Q4 in most cases, but it's been in a better rate environment for the last 5-6 years than now. So I am unsure what happens. But having said that, I am DCAing. It doesn't matter. So,
No, but give us a prediction. Do you think there's going to be good guidance Q3 or bad guidance?
I actually think it's going to be good. If I was to
Okay, so
predict.
it's going to go up then, because you're the Enphase guy.
I actually fear that it's going to go up. Like I want it to dump because I do want some more shares.
So what if it dumps on Tuesday and I have some cash on the side, which I just got?
Oh, you shouldn't buy. You shouldn't buy good stocks.
It would ruin your reputation.
It would ruin your whole channel's reputation.
But the thing is, where would that Q3 guidance be coming from? Because we still know that we're either going to get another pause or 2 further rate hikes.
Well, I'll tell you,
people are waiting to purchase solar, then they're going to be like, well, I'm just going to wait for more favorable rate environment. That's really one of the biggest things.
That's possible. Or a lot of people who understand math. I keep getting back to the math. If you actually do the math with incentives right now,
Yeah, but nobody understands.
if you did the math with the actual incentives, all right, then it pays off. But yes, who does the math? But
that's the thing. Nobody does the math.
If people are looking forward instead of back, if that is they're actually looking like, okay, I'm going to be doing this next year. I better get in the queue or whatever is going on. Then we might have good Q3, Q4 numbers start to come in. If they're not thinking that way, then they're waiting until next year. Then we're going to have bad numbers. But once again, what are we talking about? 2 quarters of bad numbers and then it's great. Like that's what I think. Like,
right.
Yes, we can have 2 quarters of bad numbers and it's great.
Because the other part of it is, wintertime, you don't get that much production anyway. By the time you install your system, you want to install it in the summer because that's when you want to store.
I installed mine in the winter. I don't know what you're talking about. I don't care when it gets installed.
But the world, it's not all about you. Other people think differently.
I am a customer who said, when can you do this? I had to fit into their schedule. They said, we can do this in February. Sure. I said, okay, start it in February.
Sure. But half the country is buried under snow, is what I'm saying. And so most of the installations are going to happen.
You don't need to sell. Like Enphase is such a small minority. They can sell to 3 states.
So you think Enphase will hit $200? That is your prediction.
Oh, I didn't say that.
Well, what are they at now? I just bought some of them at one.
Well, if you want an actual prediction, I think they are not long for this world to be under $200. Let me put it this way. Whether it happens this quarter or next quarter or 2020, they're not going to be under $200. The chance to buy it under 100 is totally gone, in my opinion. That's not happening. Maybe 130 might happen. And over 200 is probably almost a certainty in my brain that next year we're off to the races.
When you think of the market cap, it is a bit ridiculous that this company is still at $20 billion. Like we're still floating around here. It is a bit ridiculous.
So, when I look at the chart in terms of like the revenue growth rate, they're going to definitely do really well on a year-over-year comparison. Because if you look at it, this is going to be the June comparison. Last June, they did about $500 million in revenue. And last quarter, even with high interest rates, it was around 0.7. So if you look at a year-over-year, it's going to look good. But in terms of like quarter-over-quarter, this is going to be the big determining factor. Because usually what are they going to
factor more? Are they going to look at prior quarters? Are they going to look at prior same quarters like previous Q2s, or are they going to look at cumulative quarters?
Well, that's going to be in the eyes of the beholder, right? Because at the end of the day, it's about what people are valuing this company like. You know, from what I heard during the last conference call, the CEO was optimistic, but he was very cautiously optimistic, where he didn't want to give like crazy guidance that, oh, you know what, we're going to do every single quarter another beat. You know, he was like, look, we've got some headwinds on our side in front of us, but we know how to manage them, and this is just a short-term thing. And I think most businesses are doing that. Like this earnings, if you've seen it, most people have been conservative with their guidance going into 2023, like towards the end of 2023, because I think a lot of them are seeing recessionary headwinds coming their way. So they're not trying to be so optimistic that going into Q4, they set themselves up for failure. Now, how does the market react to that? By dumping them, thinking that, oh, this business is dumb, it's over, instead of rewarding them for having leadership that's actually honest and saying, hey, you know what, in the short term, we're going to take some hits, but in the long term, we're still growing. We're going to do really well. We're going to do the cutbacks that are necessary in order to make sure that we have future growth in line. So I think that's going to be one of the keys. And I think a lot of times we tend to focus on the numbers instead of the substance in the actual earnings call. And for anyone watching here, learn how to actually just sit down, take like 30 minutes for those conference calls and listen, because you get so much gold out of that. Like me, SLG, when the earnings came out, the shit just took a dump. It was just down, right? I patiently waited because I looked at the numbers. They looked okay, but it wasn't like super bad, but it wasn't super good either. But when the CEO came on, calmed the markets down, soothed the general sentiment, said, look, this is where we are, this is where our issues were, but this is what we're doing to correct it. And one of the things that he said just literally shot the company back up. They said, our ultimate goal is not to cut the dividend. While the other REITs have been cutting their dividends, SLG said we're going to do everything in our power to maintain the dividend, and that their compensation is more aligned with shareholders, because their cash compensation, I think, is almost like 75% of their income for all of their executives is coming in the value of stock, not in the value of cash comp. So that was just like music to Wall Street ears, and that shit shot right back up on the same day. So a lot of times we want to just look at the headline number and just, oh, sell. Wait until the CEO comes out, let them explain what's actually happening, and learn from that and see like, hey, is this something that, you want to keep forward? So
Vitaly?
Well, don't forget that Enphase is a highly profitable company. The only thing we're discussing here is it temporarily overvalued? Is it not? Should it be 130? Should it be 150? Like at the end of the day, I get why people worry, because they think their portfolios are tanking. It goes from 180 to 130. They're like, oh my God, I've lost so much money, but you've lost nothing. All you've got is another opportunity to DCA into a super high quality company that in my opinion, is easily undervalued at 130. Easily.
Okay, so
all I want to add is this: I follow Gary Black, and a lot of Gary Black's subscriber posts are, and he defends this all the time. He says a lot of people get me wrong. Like, I agree with a lot of what retail people say, but I'm telling you how investors think, how the institutional investors think. If you look at Tesla, if you look at the response to Tesla's earnings, they didn't give a shit about the energy growth. They didn't give a shit about the energy, and those were crazy fucking numbers. And they were giving great guidance on energy. So even if everything that you're saying is true, it doesn't necessarily mean that the market's going to choose to see it that way. And that's when I say, what's the prediction for Enphase's stock? It's not, is it going to be good or bad? We're going to hear a bunch of great shit on the calls. Us as retail investors, you're going to listen to that guy and you're going to say, he's telling you exactly what they plan on doing. It doesn't necessarily that means the market's going to reward them for it. And so unless it's a massive beat where it's really obvious, and this is just something I get from Gary, where it's like markets want that certainty, unless it's like such a massive beat, like Nvidia's was so over the top, plus this insane guidance, you're just not going to get that push, because everyone's worried about losing money more than they're trying to make money. That's just what I'm gathering. And it's hard, because I argue with Gary a lot, but he'll write me back and just say that's not how markets think. Even though you guys
I agree with that, actually. And this is what I'm saying, that if this dumps because markets think short term, this is an opportunity for the retail investors who are paying attention, because Wall Street cannot have 2 quarters of down numbers in their portfolios. They can't. I can, because I'm not selling in 2 quarters. So as long as you understand that and you're going in for that reason, I think you're going to do really well.
Yeah, and that's the same logic that applied when I was investing, and I still am investing in regional banks. Wall Street, they looked at the numbers and they looked at the
SLG, regional
existential threat.
banks. Come on, let's
You
get the
know,
other two.
they
in
were
there.
all no, they were just Wall Street was not rewarding these. Well, not rewarding, but basically they had overly done the sell off in these companies, and so anyone that was, everyone that was just looking and actually listening, they were able to buy at like literally all time lows, and it's one of those things that I think people just pay less attention to sometimes than just the numbers. Like always pay attention to numbers, of course, but also listen to the conference calls and see what kind of like steps the company's executives are taking in order to like weather the storm. And the other thing is if the company is profitable, like GAAP profitable and operating cash flow profitable, you don't really have much to worry about, because that gives you that gives them more optionality to do things like share buybacks to support the stock price. On the other hand, if you're not profitable on a GAAP basis or an operating cash flow basis, and your stock takes a hit, you're in a really fucked up place.
That's what happened to old Kathy stocks, basically.
Should we live stream any of these? I mean, Tuesday.
I'm definitely gonna live stream Meta. I'm gonna live stream.
Well, Enphase I wanted to do on the Freelancer Finance channel, so
yeah, you should do that.
I'll probably do that there, Carlos. If you want to come join,
we can do that. And also, and I think that's the same day Enovix is going. You have
Enovix is the day before.
The 25th.
Enovix, you guys can do. I don't care too much about.
I think Johnny said 25th Enovix, 26th Enphase, and then I'll double check.
Enphase is a big one, and I feel like we should do Meta for sure.
And I mean, look, tomorrow, guys. When are Domino's is earnings tomorrow? Come on, guys.
Well, some people care about that.
Domino's actually did very well. Okay, so hold on. Here's my question. What is so Johnny said Enphase is $400 by February. January 17th.
Caveat: Johnny is super bullish.
January 17th.
He's got a lot of shares.
What is Enphase's price? January 17, 2025.
You want to tell you? Let me look it up.
Because there is an option right now that's giving like 18x if you give me the right number on this.
Great.
Wait, say it again. Ask your question again.
January 2025. What is Enphase worth?
So it's interesting. 2025.
January 2025.
Is it at least 450? Do we think that's a $40 billion market cap, which is
so. I mean, look, if it stays in the channel it's in right now, this is a big if, but it's between 300 and 650. It's between there, and with the average being somewhere around 450.
Oh, so I got it right.
It's a spread.
I'm looking at a spread right now that's paying like pennies on the dollar for Enphase.
See, this is one of those things
that's you're gambling. I just want to put
no. That's why I'm asking you. I'm saying that's why I'm legitimately. I'm not saying this for a joke. I'm saying like, does Enphase even have a shot at getting to that 400?
By the way, I've already bought options on Enphase, but I buy them in the money because it's cheap right now.
I know I'm a little bit more risky in terms of out of the money, but that's why I'm asking you, the Enphase professional. Do you think there's any chance in hell 400 by January 2025 is possible?
Do I think it's possible? Absolutely. Yeah. Absolutely.
It's not like me saying Palantir is $100 by January. Like, I don't think that's gonna ever happen.
But I don't actually gamble that way in terms of like investing. I do much safer calls. Yes. So I have 150 strikes for 2025
Yeah, I still don't understand that strategy.
Yeah, but you're buying
how these in the money options give you that much alpha. Or maybe
it does, because what I do is I do these synthetic longs now where I sell puts. I get paid a premium for 2025, $20 a share or whatever. And then the longs on the call side are, let's say, $50-$60 a share. And then the difference is around 30. So I'm getting an actually under $200 stock price. I get to control 100 shares for like $3,000, $4,000. Do you understand what I'm saying? Get to control 100 shares.
You actually want to exercise these contracts, correct? Is that
I don't know yet. That's the future. But my point is, I might not if it's at $400.
Okay, hold on. Well, help me understand. If you do an in the money contract at like 150 and the thing is at like 400, but you buy it when it's at 180, where's the alpha on that option? Because isn't the whole point of options you're taking it out of the money?
The whole point is to control the shares. Okay,
but you don't want to exercise the contract. So what's the point?
I don't know yet. I'm saying probably not, but I don't know yet. That's not the point though. The point is you want to control as many shares. So I can take $18,000 and buy 100 shares, and I only have 100 shares, or I can control 500 shares approximately doing my strategy. Do you follow what I'm saying? I'm leveraging. It's called leverage.
Will the options give you any alpha?
Of course they'll give me alpha.
Like how much? Yeah. Like you gain like a
well, there's an options calculator. Go ahead, bring up an options calculator. You'll see what it does.
It depends on how far up they go. I mean, if he's buying an option, like let's say that's worth $20, right? If it goes way beyond that, then he has unlimited upside
unlimited
potential.
upside.
You
So
know.
so let's
But-
say I paid. Oh, wait,
yeah.
let me give a $30
Yeah.
I paid approximately with the synthetic long, whatever, 35. I
Mhm.
forgot exactly. So let's say I paid that, and then the stock is at $400. You realize there's a difference between like $220, and I only paid $30. What's my multiple there?
When you mean $30, you mean for the 180
Yeah.
leap, basically.
So 150. I paid $30. Let's say 180. The stock is at $400. So
Okay, so
400
that's-
minus 180,
That's 220,
220.
right?
I only paid $30 for the shares.
Huh.
He leveraged up. He's using
Don't you
leverage.
understand?
To,
I get 500 shares for the same price instead of buying
Yeah.
the stock because I think it's going to
So
the moon.
220 divided by 30 is your alpha. It's almost 7x.
Something like that. I mean, look, it depends if it gets to 400. So
Right,
we're giving it an example here, but if it
So
gets
then
to
the only
300,
reason people do out of the money options is because they could get like a 14x versus a 7x.
oh yeah,
because you're
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 50x.
leveraging much higher. You're leveraging at a much higher pace. Like imagine right now when Meta was 80. Some people did this. It was at fucking $85. I bought call options for like 150.
Yeah.
Right?
Yeah.
Dude,
And
there
I
were
bought
people
$100 strikes.
Yeah. There were people that were buying call options at $200. And I'm talking about they were fucking paying pennies on the
You saw the
dollar,
Wall
right?
Street
Like,
Bets post, right?
Yes.
The guy who put
yes.
39,000 into Meta at $235 calls turned it into 2.6 million.
Yeah.
because
Mhm.
That's
Meta-
the thing with leverage, right? Where leverage can like he at the most he would have lost $30,000. At the gain, he gained this much. But the thing is, the chances of him losing that $36,000 is actually much higher. So
Yeah.
that's the thing with going out of the money. The more out of the money you go, the less chances are that you're going to be profitable. But it also means that if things work out for somehow God comes down and just blast the thing back to all-time highs again, it could really set you up.
That's what I'm
to be
asking.
really-
Is Enphase going to 450 by January 2025?
Well, why don't you be safer and do the 300, instead of going all the way to 4? Like, be a little bit safer.
Alpha's not as good there, bro. No,
All
I'm
right.
just
You see,
kidding. I'm
this-
genuinely just asking.
Don't get greedy, Amit. That's
Yeah,
the problem.
getting
Bro.
very
When
greedy.
especially when you've had some early bouts of success, that is bad.
There's no
because
success there. I haven't taken any profits, so technically,
I think you
there's
should
no
change
real-
your channel to options trading with Amit.
No, I'm not actually gonna
I don't
do it.
think you own any more shares of anything anymore. I
Pull
think
up,
it's all
pull up
options now.
Imnop's comment at 8:06 is exactly what I think everyone saw.
Jeez, the gambling in my eyes.
I could see the gambling.
Bro,
going
I
on.
did a spread. Hold on, I'm just gonna show you this spread. I did.
Amit was
fucking-
like, "How much could I make?"
I bought
Yeah.
the 480. I sold the 490. For 90 cents, you can make 900. For $90, you can make $910. So that's a
No, if
That's
you're
a 10x.
buying out of the money options on Enphase, do not buy any spreads. Just buy the options, and then you have unlimited upside if it happens. I wouldn't do spreads at that kind of crazy valuation. if
But he
that's
would
what
only
you're
do the
talking
spread so he can buy more. He would only do the
More
spreads
spreads, so he can do more
premium,
spreads.
so he can
again.
buy more
I'm not even
spreads.
seriously. The only reason I'm asking, it just got me thinking. Like you guys said, Enphase is $20 billion. Palantir's at $40 billion.
Yeah.
Right. So Palantir is double what Enphase is. Obviously, Enphase is way more profitable, way more growth. This whole solar shit you guys keep selling me. So I'm saying, is it crazy to assume it's double 20 billion, 40 billion, which is 390, 400 ish?
It's a very safe look. It's a very safe assumption for me to actually yeah, that sounds very reasonable. What you just said.
But listen to the
Or-
people in the chat.
or-
Like, just be careful.
Or Amit, that means that Enphase is fairly valued and Palantir is fucking overvalued. Just think about that.
I have not disagreed with you. I've said Palantir's overvalued because of their growth projection. Now, if that changes Q2, which I think it might,
Yeah.
then
You
it
have
will
a
be properly
you have a
valued.
company that's growing faster and they're growing more profitable versus a company that's way more speculative.
Have
Yeah,
you
but I
sold-
think Palantir's
speculative
TAM is
companies
bigger than
getting higher.
Enphase. I think Palantir's TAM is
Huh?
bigger than Enphase. I think
have you
Palantir's
sold-
TAM is bigger than
Okay,
Enphase.
all right.
Keep saying that 10 times to yourself every night.
It's like his candy man. He says it in the mirror.
God.
Happy birthday.
I'm afraid of you. Palantir's TAM is bigger than
Right.
Enphase. Please,
No,
God.
it is, bro. It is. Palantir's TAM is bigger than Enphase, bro.
Sure.
You're talking about all these solar homes. I'm talking about
Yeah,
every
well,
single
what's energy
commercial
at the end of the
business.
day? Well, who uses that?
Yeah,
What
you
is
need
energy?
data to manage that energy. So that
Sure,
data
okay, whatever.
is Palantir. You know what I'm saying? That ontology. You know what I'm talking about? Drug discovery, all the drugs in the world, diseases.
Do you-
like
do
there's
you-
just so many verticals.
All right, first of all, it's
that,
been
like,
114. Do you
yeah,
own any
all right.
shares? Let's just end this on. Do you own any shares of anything anymore?
Yes, I do.
It's all options now.
No, no.
Besides Palantir. Do you own
He
any
put it on
other
Twitter.
shares
He put
besides
it on Twitter. He has
Palantir?
5 positions: Hood,
I have
SoFi,
TFC.
Hood,
No, no,
SoFi,
No, no,
they're
I have
all
Palantir.
options.
I have no. My portfolio is
TFC.
Palantir shares, TFC options, Robinhood options, SoFi options, PayPal options.
And this is how you know he's not an investor. People,
You see,
this is how you know.
You guys remember? You guys
When you
remember?
have more
This is a
options than
conversation.
shares.
This is a conversation I had with him. I said, "Do not become evil with options. All right, options are fucking dangerous because options you have a lot of time issues. Okay, I would tell you if you've done very well on options, do not get greedy.
No,
Okay,
I'm not,
especially
look, hold on,
yeah.
to defend myself a little bit. All these options have gone down over the past week because of the sell-off, and I'm still up like crazy because I got them so cheap, and I have 500 days till they expire.
That's the gambler's mentality.
No, no. I do think that these will turn out okay in the next year and a half, and then when I have that nest egg, I can really deploy capital because I'm not going to get the output if I just.
If you want to take one piece of advice from Big Brother Chris, okay, it would be that at least pull your initial outlay out. That's all I'm saying. The reason why I'm saying that is because you don't know when things are going to crap the bed. Okay. And especially if you're up right now and you're up significantly, take some money off the table, put it on the side, be like, okay, you know what? This is the house's money. Let me just buy some shares of some companies that I like with it and just chill with that. The rest you can let ride. I don't really, at that point, it's just profit anyway. The reason why I say that is because what you're doing right now, and I remember when I had this conversation with you, I said, do not turn this into don't go into this with speculative names. And if you look at SoFi, I'm sorry, but SoFi is still a speculative name.
Yeah, but SoFi, do we not think SoFi is $15 by January 2025? Or really?
See, that's the problem. That's exactly.
I don't think that's a gambler's mind. No, because I've done a year of due diligence on this company. I don't think that's crazy to say.
Amit, I remember.
See, but if you're wrong about your timing,
he's saying Enphase is a $50 billion company is absolutely gambling, and I'm just having fun with you guys here. But SoFi to be $15 billion by January.
But again, remember what Gary is telling you, that just because it seems to make sense to retail, it doesn't mean that the
No, I agree. The reason SoFi's got fucked is because of all these banks.
And you need their money. Look, at this point, if you like this $20 billion market cap of Palantir is all retail. Let's be honest. Yeah. So if you sell now, you're taking retail's money. You need the big guys to pile in their money with high share counts for you to make the multiple that you're making, and they're just not piling in yet. And the same thing with SoFi. Yeah. It's $8 billion, man.
Look, I agree, and I'm not saying I need to wait till January 2025 for SoFi, but I do think Robinhood, SoFi, PayPal are going to be fine over at least in the next 6, 7, 8 months. And I think that's okay.
Look, PayPal, I could agree with you a little bit because they're undervalued. Okay. The reason why the strategy that I don't want to say I taught you because I showed you the reason why it works. The reason why it works is because you have companies that are fundamentally undervalued. Okay. Fundamentally undervalued. They're trading below book. Their PEs are at all-time lows. So the option strategy that option strategy actually makes a lot more sense. Mm-hmm. But the minute you try to speculate on what could be possible, that's bad because it could happen and it could not happen, but the chances of it not happening are much higher. The other strategy is just it reverting back to the mean again, right? If it's fallen 80% down, but the business is healthy, the chances of it going back to just being normal again are not that bad. But if you're talking
those are the biggest positions I have. PayPal and TFC just need to get back to their mean average, which is fine. Robinhood and SoFi are a little bit speculative, but I think SoFi is $15 January 2025. I'm willing to take that bet personally.
Yeah, that's fine.
The problem is 99% of your portfolio is now options. And I just want to point out.
But generically, you're
not holding any
hold on. Generically, if you say that, it sounds bad, but then you guys aren't talking about the very specific positions, and you're not dealing with the minutia of.
No,
that.
it matters. It matters. It matters. You don't have a long-term mindset right now. Besides maybe Palantir, but I just want to point out because I don't want people to get confused. 99.999% of my share, my investment is all shares. Yes, I do have some options on the side. Hold on, even Enphase options.
Yet.
I'm saying I have almost no options compared to what I have in shares because I don't know when things are going to actually play
larger portion of capital. If I had as much capital as you, of course I would not fucking.
But what I think
I'm playing with.
I didn't have that. I didn't have that at your age, and I still didn't gamble on options. So I don't know what you're talking about.
It's not gambling.
The point that I think you're missing is that this is a conversation about portfolio allocation. This is about your portfolio is too allocated into speculative plays and call on.
We're not speculative.
But hold on.
Yes, they are.
We just broke down each position.
Options
is speculative.
Options
SoFi
in general.
Is speculative.
Hold on. But options in general are speculative. The idea would be that if you have, say, $50,000, you're like, okay, I don't have hundreds of thousands of dollars to invest. Then unfortunately, what it means is you can't do all of the options trades that you want, because you're going to have to allocate your portfolio in such a way that you've got positions in, say, large cap companies, mid caps, and then some small caps. And maybe it means that you can do one of those options. So you need to be extra diligent about the one that you pick and then go big on that. This way, your overall portfolio isn't at risk. If we have anything like who do you think got crushed during the pandemic? Was options traders, right? Everything just tanked. Unless you were holding a bunch of put options, everybody with call options got wiped out. But people that held shares and held through it were able to weather it. And if you had a good cash position on the side and you could weather the pandemic, you were actually okay with your portfolio. Maybe you added some more. But if you were an options trader and you had calls that were expiring June of 2020, everyone got slaughtered.
But look, here's the also nuance here. These options I don't need to hold till expiration. Second of all, because of how cheap I got them, SoFi would have to go back to $4. TFC has to go back to $26. PayPal.
The fact that you think that can't happen is what's
no. It can happen, but then the question is, if it happens in the next 6 months, over the next year and a half, with all the macro conditions coming the way they are in terms of the Fed cutting rates and things of that nature, do I think SoFi is at $4, which is how I have to lose money on the options?
Okay, so either just think of it this way:
breaking even by January 2025.
Hold on, either you have discovered how to beat the market. You at 26,
no, I'm not saying that. I'm saying this is rational. This is not gambling.
Or the opposite is true, and you're just gambling. That's one or the other.
You think SoFi is $4 January 2025? That's what you're telling me.
You don't know, but the chance
doesn't matter.
But here's the thing: you shouldn't chance it, especially if you've got disproportional gains. You should lock in some of that and chill.
Yes,
because that is where so many people make a mistake, is that they get to the point where they get so greedy, like, oh, I'm up 200%. I'm gonna wait until I'm up another 200%.
Yeah, but I'm not up 200%.
No, but I'm just giving you an example. I'm giving you an example. Like right now, you're up some of your TFC position. You're up what, 50 something percent plus, right?
Roundabout, yeah.
Yeah. What's gonna happen is if TFC, let's say, stays flat or goes down, that time that you have when you bought it, it was almost 18 months away. If the market fucking does dumb shit and goes down, the amount of time that you have for TFC to go back to what we're assuming is going to be a lot more riskier for it to happen. So just remember that right now you have this opportunity that you've actually gained a good amount of capital. Take some of it off the table, especially your initial outlay. At least pull some of that out so that the rest you can let it ride. Vitalik Inovix, he did that. I did that. We were like, yo, listen, we got in at $8, $9, $10, whatever. It got up to $20. Just to hunt for another $2, maybe $4 or $5 in Enovix, we're going to risk our entire initial capital? No, we made our money. Take 75% off. I kept 25% of my position in Enovix. The rest I pulled out and I put it in cash. Some of it I converted to PayPal spreads, and that's it. And I'm chilling right now, right? Because I know one of the things that you don't want to do is you don't want to get into the zone of, I know exactly the minute that any investor, and I'm going to tell everyone in this chat, the minute that you feel invincible in the market, you need to take a goddamn step back. Take a look in the mirror and say, you know what?
Fair.
This is.
You've never lost 95% of your portfolio like I have.
I have lost 50%. I have lost 50%.
No, I'm saying I've lost big numbers.
Big numbers.
So in this case, when you're gambling with options, when you're up a certain amount, 50% usually is my limit. Like you're up 50%, it's time to sell immediately half of them. Not even think about it. Like, if not all of them, because they're just options. All right. So you really have to think about it. If you're up 50% or more on these options, get rid of, take your capital back, buy some shares of some companies you actually want to keep long term, and that's good. They paid for that. And then you can continue gambling with what's left. But just don't be 95% in options, because then you're just an options trader. You're not actually an investor.
And the other thing I want to mention to you about options is you paid a higher premium for the options, say call options. You pay a higher premium at the onset of it because of the time. You're saying, I want to be able to exercise this option anywhere between now and 2 years. But to Chris's point, the longer that you get into that contract, the less valuable it becomes, the less premiums attached to that contract if you want to buy it on that day for the same duration remaining. Do you understand? So you're slowly getting squeezed out of your position because you have used up the value of it on the time, even if you haven't used up the value of that contract on the dollar amount. Does that make sense? You're exercising part of the contract every day that it goes. You're exercising the time portion of the premium that you.
But that's also good if the stock is doing what you need it to do.
It is, but what happens is if you get caught upside down or something happens, and let's say you're 6 months out and you want to unload the contract, that contract itself is going to be worth less. So your percent gains won't be as much because it's not going to be as valuable to the guy that wants to come take that off your hands.
Yeah, that's true.
Do you understand what I'm saying?
There's one other thing to remember. At any point, this company, and not just at this company, but any company, something could go wrong with it, and a black swan event can come and wipe it out. You do not want to wipe out. At least when you own stock, a black swan event will send the company crashing down, but eventually you'll be able to get back up again because the stock, you could just hold it until it gets back to normal. Yep. Let's say tomorrow morning, Anthony Noto, while crossing the street, gets hit by a bus, right? And now the entire bull case that relies on this excellent CEO bringing this company to the next level goes out the window, and the stock prices crash. What happens then? You know, Elon Musk dies tomorrow morning, and basically now
Vitaly and Carlos are fucking broke. If Elon,
no,
dies.
see,
I actually think the stock.
See,
would go
I own
up.
the shares. I own the shares.
Yeah.
No, you're missing the point.
Yeah.
No, I still think
own
the
the
shares
shares.
crash. The
It
shares
can crash. It can crash for 2 years. It can crash for 3 years. If the story and the narrative and everything's still playing out, I still have it.
I don't
Nothing
think the
has
story
changed.
plays out if Elon's not alive.
Hold on, nothing
Fuck
has
that.
changed. No, there's
Yeah.
still execution.
No, a lot
and
of things
energy.
have changed.
Energy business is still going to keep growing. Car business is still on the road for 10 more years. So those things
I
are still
disagree with
happening.
that.
Whatever.
Yeah, the guy's literally
My-
telling people on the earnings calls
My
to buy
point
the
is,
shares. It's
hold
been
on.
10x.
Yeah,
No other
you're
CEO
trying to
is gonna do
switch
that.
subjects right now, but it's not working because you're totally getting killed here.
Damn it! you
Okay.
caught me.
You're talking to three guys. You're talking about three seasoned dudes.
tried to get him
Come
angry
on,
about
man.
Elon. I was like, what
Some guy asked me actually when I lost 95%, and I did have this story before. It was in
I
crypto.
know you told me at Cheesecake Factory. I was there.
It was in crypto. It was basically when I had Bitcoin, Ethereum, and a bunch of shit coins too, but I did have Bitcoin and Ethereum. And when it crashed, it's because I didn't have options on Bitcoin and Ethereum. I had Bitcoin and Ethereum. So I had to wait 4 to 5 years. I forgot exactly. Over 4 years till it returned, and then 6 to 10x, whatever it did. My point is I had the actual thing. Okay. Whatever it's a stock, equity, crypto, I had the thing. I didn't have the option on the thing. All right. That expires. That would have expired worthless if I had that because it took 4 years to return. So
Just
know that
remember, me
happens.
and Vitaly are rarely on the same side of a lot of topics, and we're on the
Not
same
even,
side.
not even ever on the same side of the screen. Think about it.
Yeah, well,
I mean,
we're
I'm
on the
just
same
saying,
side
like,
of this.
Like,
Today
but
only.
here's the thing. No, put me back.
Look
But
up
It's a
here's-
like
story.
Yeah.
Lovely fellow.
But here's the thing: the few times that me and Vitaly actually agree on something, bro, that's like a fucking bull flag. Like we agreed on Meta, Enovix, right? So just
PayPal.
saying, the few times that we do agree on shit, things have gone up the
And not by a
to
little
the
bit.
moon. Yeah, by a lot. So it just goes to show you that each one of us, if you got two people who have counterpoints on styles of investing and they can come together on something, that means that they're probably speaking a little bit more legitimately. So I would say this to you, Amit, don't wait so much and get greedy to the point where it's like, yeah, this is definitely going to go to 15, because I still remember when Palantir was in $15 and $20, we were doing podcasts and people were like, man, this will never get to $7. You remember that? This will never get to $10.
Yes.
If it goes to $10, I'm going to mortgage my house, sell my kids, and go and buy more Palantir. And then it went down to fucking almost $6. Think
Chris,
about
I
that.
agree with you, but this is also 2022 when the market is not
I
rebounding.
know, but
or
what you're
crashing.
saying that,
That's,
but
that's
this
the
is
only
also-
nuance we have to
okay.
remember.
You know what? I don't
There's
think
always
I don't,
something in the market.
I just
Always
don't-
something.
yeah, we just gotta let's just end it there.
Yeah, let's
and
end
and
it.
also for you, David and Chris, I think we also have to remember what it was like being 25 years old, and you just gotta let the guy do
Bro,
what
it's not
he's
even.
gonna
It's
do.
not even that. I've taken massive losses before. The only nuance I'm having here is if
Yeah, but
the
how long?
macro,
Hold on,
if
but
the
how
macro outlook changes dramatically, I see what you're
I
saying, and
how
I
long-
break even on
I
some of
meant
these
don't
outlook.
change your
you been-
strategy.
How long have you been? How long have you been investing?
5 years. And the
Okay, and
options
when-
have been
and-
alive on my
wait,
portfolio for
wait.
less than 2 months,
Wait,
by the way.
But when? Okay, 5 years. And when did you make your first trades? what year?
2019.
2019. Okay, so you started into the stock market about 6 months before the entire stock
Yeah.
market has changed and has not ever returned to what it looked like in 2019. So in your first
Correct.
6-7 months of investing, you were starting to get a taste of what markets would look like at the end of like a long 10-year cycle recovery from the last crash. And then we had another massive crash. And now we're in this environment, which is crazy. And then you start a YouTube channel. So it's like this environment or the the experience that you're getting is just not necessarily what markets actually are, and they'll have a way of humbling you. They always have a way of teaching those lessons to people.
Bro, I get what you guys are saying, but the one nuance is
No,
if
you don't, because
if-
you keep giving me a butt.
No, I do, but I also think you guys want to impose this like teaching moment, which I get, but then I'm also like, guys, SoFi is not going to be $4
Oh God!
in
Stop giving me
January 2025.
examples. Stop,
I do not think that's gonna, and if that's not going to happen, and I'm lucky enough to get my options, when it's
you know, some
$4,
people just need to lose it all, okay, and that's when they learn.
Yeah, but you're not.
Maybe that's
listening to me.
you.
You're
I don't
listening
know.
to
We're
what I said.
not even saying get out of the position completely.
Yeah, we're
we're
not
saying
saying
take
Well,
some
that I agree
money
with.
off.
I agree with
table.
that. I agree. I'm not saying I'm not
Yeah.
going to sell off some, but the way it's sounding like is just like get out of options, get into shares. I'm like, I got
No,
them
no, 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 no.
covered.
I'm saying
No.
no, that's
No,
fine.
you know what?
but
You know
then-
what the real question would be to ask? If this was your sister's money, would you be doing
Well,
the same
I hope he
thing?
took out his sister's money. We talked about
Yeah,
that.
did you?
I'm
Did you take
waiting
your-
till after earnings.
You're waiting till after he's
Dude,
gambling.
that's even
more.
worse.
I don't think
That's
that's the
even
worst thing in the
worse.
Dude, you
world,
become a
bro.
degenerate gambler. It's really ridiculous.
Because here's the thing.
Take out
SoFi,
her money, okay?
God,
I
I'm
got
seeing
her the
25-year-old
options.
Chris.
I
I'm
got
seeing
her
25-year-old Chris.
I got her the options when it was $4.
Yeah.
SoFi
Okay.
would have to fall 50%.
Okay,
get a
take
tax
the
there.
money. Take the money and run.
So
Well,
Do you
my,
first of
know-
all,
okay,
first of all,
I'll just-
hold on. You did a spread on SoFi, right?
correct.
First and foremost, let me just explain something. It doesn't have to go down to where you bought it to actually be less
No, I
than
agree,
the
but it would
value,
still have to get down to that $6, $7, $8 range. I mean, like it would have to go down a little bit more.
which
than
is
this.
But it's an
$1 to
But
$2.
at $8 billion, this is the thing. At $8 billion, it doesn't take much to go back down to $6, $7, $8.
Dude,
Yes.
it's
That
a
is true.
volatile, shitty company right now. Okay, it's
not
a
a shitty
spec,
company, but
okay,
it's
fine. It's a
volatile,
spec
yeah.
bet. It's a spec bet. That's my point. That
Yeah.
these are
Okay,
speculative companies.
Do you know what
Hey-
it's like? I'm sorry, I can finish.
Yeah,
the
no, go
thought.
ahead. Go ahead.
It's just what you're sounding like. What you're sounding like to us are people that get fucked on margin. Okay, this is what it's like. It's like I've got my portfolio value is so high. Of course, I can get 50% in because Tesla or Palantir or whatever this company would have to fall to this level in order for me to get margin called. And this is why Elon
And then they get
said
margin called.
on the call, don't fuck with margin. People thought he was saying about the downside. What he was saying was don't get too excited if the earnings are great and they rock it up and start to leverage yourself in margin because you can lose your entire position. And it's the same sort of deal. This is the same lesson: playing with margin, playing with options, playing with other people's money. It's the same thing. Now, look, I think we're done. I don't think we need to
Yeah,
say
I think we
anything more.
gotta-
But
we
it's
gotta
just
go
something.
on.
Just consider it and pretend like again, like to Gary's point, you can't lose money. You have to have some level of I can't lose this money. The idea of like I'm young, I can make it up. It's no big deal, or it's a small amount of money. Like lose that and say, give some credence to the idea of part of your responsibility is to not lose money. That's it.
We're just teaching you how to do risk management on it. That's all. It's not to say that you are not good at analyzing a company or that you're like the things that you're seeing are wrong. We're just saying a lot of investing isn't necessarily even about reading the market and all the other bullshit that's out there. It's about managing your risk so that you're not taking so much risk to gain a little bit. You want to risk a little bit to gain a lot, not the other way around. And especially if you've already made some substantial gains, best thing to do, take a little bit off the top, especially your initial outlay, so that you can live to fight another day.
Right.
And if you really are still even bullish about the company, sell the fucking sell the spreads and buy the stock. Right? And then
So
you'll
listen,
still have an easy double.
I agree with Chris. This guy Tota Dinma says, "What if it works for a minute?" Okay, that is not the issue. If it works, the next time he will be more empowered to do a bigger.
I
bet.
disagree with that fundamentally.
And
disagree with
he
that.
will
I disagree with that.
he will lose much more money in the future than he will if he just lost it right now. That happens to everybody, by the way, not just
Yeah,
you.
it
I'm not just
does.
talking about you in
Yeah,
private.
but I've
I know-
been-
It
I know
happened to
a guy-
me. I'm
I
sure it
know-
happened to
been
Chris.
there.
I'm sure it happened to Carlos.
But I've
And
been
you're
through that.
going to have to go through this too.
But the thing is, this is where your investment career is too young for you to be able to say that with confidence. This is why I asked you that. The only real market, the market that burned the three of us was the market between 2000 and 2019, and you weren't in it. And what I'm saying is,
No, that's wrong. 2021 is what burned all of us, and I got burned just like
no,
you.
2021.
that was
2021 did
nothing.
not.
2021
burn that much.
lasted 2 months.
Yeah.
No,
Which
you-
market are you talking about? 2018 August? Is that market?
what I'm talking about, what I'm saying is, since 2020, the markets have been trying to basically get their legs with all of the money printing, right, and the macro environment, wars, supply chain issues. There's been so many macro events that are basically like scattered the balls on the pool table. And what I'm saying is the markets left unimpeded without, say for multiple years, without any of these crazy macro environments, operate differently than this environment right now. Do you understand? Like you're coming to a party when there's like a fight broke out. It's not what it was before the fight broke out. Is all I'm saying.
All right.
So this experience that you have is not necessarily indicative of how markets naturally are.
Well,
Yeah,
can
no,
we
that's fair.
continue this
That's
another
fair.
day? I mean, unless you guys want to keep chatting about it. But
No, this was good. This was good. This was an
30
hour 30. We had 440 people here, which is I didn't expect 440 people here.
I
as well.
didn't expect it.
You know,
That was great.
this is one of the reasons why
Chris needs
I'm
the last
always-
one. Needs the last word.
Yeah, I always do.
Chris, last
I
word
just-
to tell.
This is. Let me tell you something. This is one of the reasons why, even when I was talking about spreads and options, remember I said I had this conversation with you guys. I hate talking about options because there's only a limited set of times where you can use options effectively,
Mhm.
but people get greedy and then they think that they've figured out how to be the next Warren
Okay, but
Buffett.
to be
And
fair,
then-
Chris, I am in the options on these positions that you said. Also, have said that this is
fair.
one of those times in the market you can do it. I'm not throwing options at every fucking side. The Enphase conversation was just for fun. I'm not fucking buying Enphase options. for my
the only
450
and
strike.
just
Like, I'm
the
not doing
only the only options that I spoke to you about were TFC. You did the other ones
no SoFi
on your
too.
own,
SoFi. You
And
you sold your,
Robinhood.
you sold your
And
SoFi
Robinhood.
ones, but Robinhood was my own.
Right.
Robinhood was my own. Yeah.
right? I took my initial outlay and then some on my TFC. I
Yeah,
only
you
have
sold
a
out of
little
all
bit left,
TFC and SoFi. You have PayPal left. Correct.
right? So this is what I'm trying to say, that you listen to me on the way in, but you're not listening to me on the way out, which is the part that, like, I'm just telling you, be cautious, man.
That's
And
true.
the reason why I'm saying this is because, bro, I care about you enough to the point where I don't want to see you lose and get humbled, because we've all been there, and it's been a shitty fucking feeling, man. It's
we should
one
actually
thing.
talk about this. Is the thing. I think we should actually talk about it and talk about some of the massive freaking losses, the stupid
Yeah.
mistakes, whether it
Yes.
be dumb things that you bought, pump and dump schemes that were sure to work that didn't happen, things like this, buying options that didn't work, holding
Well, we
too
could-
long, right?
I-
when you just kept
I think-
holding.
I
because
think
it's gonna
Amit
go up
thinks-
forever.
I think the mid things that we're saying don't buy any options. No, we're just saying
Yeah.
get rid of half of them, invest in companies,
That's
keep
fair.
half of
That's
your-
fair. I'm
and
not
keep
saying
half
that's
of
not
your-
fair.
keep half of your options, because worst case
Yeah.
you lose half of it, not 90% of your whole net worth, which would be insane.
No, that's fair. That's fair. That's
All
fair.
right. Well,
And you could buy the stock, by the
Nope,
way.
Chris has
If
to
you
finish,
really
and he
still
has to
believe in
finish
it, you
his
could just
Yes. That's it.
Yeah,
All right.
just
See
to
you guys
piss
later.
him off.
I'm out.
Bye. Later.
All right, everyone. We'll see you back 7 p.m. on my channel tomorrow. 7 p.m. New start time.
yes. Okay.
Good.
bye.
Later.
7 p.m. Bye, everybody. Thank you.